Hey folks, Dan Frio here, the rate update. I'm talking to those investors out there that are looking to refinance or buy rental properties. Really important video. Don't miss it. So if you're in real estate now, you have investment properties, you probably understand what debt service coverage ratio means, but if you don't, watch this quick video. Then I'm going to break down a new program that we have available for you. Okay, so if you're an investor out there, meaning if you have investment properties or you're looking to get into this market, this is a must watch. Here's why. If you own rental properties now, you know it's in many cases it's really tough to get a mortgage because the taxes. When you file your taxes, you're taking how much in rents you received minus the depreciation, minus taxes, insurance, this, that, one-time expenses, fix me ups, this, that, everything. And the bottom line is you might be completely losing money, okay? But I got an idea for you. Wonder if we can create it that as long as that unit is producing enough income to make the mortgage payment, okay, you should qualify. Okay, so that's what we're going to talk about today. So let's go over what debt service coverage means, and then we'll break it down to maybe your individual situation. So let's get into what is debt service coverage. So basically, let's start right at the top, and you're going to see right here, debt service coverage program focuses on property's cash flow. So no other income and documentations are required. So it should be fairly simple loan. The minimum debt service coverage is 0.8 for purchases and 1 for refinances. Okay, so let's explain this real simple. And I'm trying to do this in its simplest terms so you don't have to be a rocket scientist to figure this thing out. You can see right over here it says gross rents or Form 1007, 1016, or 216 from your tax bills or tax returns, and then PITIA. What in the world is that? Well, principal, interest, taxes, insurance, and association payment. Okay, so what the PITIA is basically engulfs everything that would possibly be included in your monthly mortgage payment for that particular parcel. Okay, so it's the loan payment, principal and interest. Then you have real estate taxes, you have homeowners insurance, and then you might have PMI, you might have some other things, you probably don't, but and then you have the association fees if it's a condo or something like that. So it's everything that could be possibly imagined in your mortgage payment, okay? So it says gross rents. So let's say you're getting $2,500 in a month in gross rents, okay? So that's $2,500, that's your top number, and let's go back to that right now. Your top number would be $2,500. Well, that means as long as your principal, interest, taxes, insurance, and association is equal to or less than the $2,500, you should qualify. Okay, so that's the gist of it. We don't need your tax returns. We don't need your pay stubs. It's basically debt servicing, meaning that property can stand on its own. It has enough in rent coming in to make the mortgage payment. You could qualify. Okay, so I know I'm not trying to make it that simple, but it is a program that it just came out recently and it's taken off like gangbusters. And the rates are really good. All right, so let's go down through here and dissect a little more in detail in this. So the minimum debt service coverage is 0.8 for purchases and 1 for refinances. You can close multiple loans for the same investor at the same time, meaning you're the investor in this scenario. You can go up to 85% loan to value for purchases and 75% loan to value for rate and term refinances or cash out. So loan to value means the loan amount divided by the value of the property. Okay. The next thing is it's available for, you can do 1 through 4 units. Also, you can do 5 through 8 units, but that loan to value gets cut to 70%. Loans up to 1.5 million, you can have exceptions. You can pull out cash up to 500,000 if you have the equity in the property. There's no limit on the number of properties owned, and you can refinance up to 10 properties for one person. Okay, that's that. Non-warrantable condos and condo tells are allowed. That is way out there in left field. Qualify on interest-only payments. Excellent for qualification of cash flow purposes, particularly with a 10-year interest only on a 40-year term. So there's all kind of caveats here if you're a investor in real estate. So let me break this down. Here's if you're in rental properties now, you get it. You're like, man, it's really hard to qualify because after all these write-offs, I'm in the negative, okay? If you're new to investing in real estate, this is the program. Okay, this is the program because you might not make enough money to qualify for 2 mortgages, your home and another home. There might be tons of reasons out there why you wouldn't qualify. So we have this available to us. It is taking off in a lot of areas in the country: Chicago, Florida, Texas, California, Arizona, Nevada. The phones are ringing off the hook with this program, and we just announced it. So I was keeping it in the back shelf for a while. We didn't want the phones ringing completely off the hook, but if you're interested in getting this, please reach out to us. How do you do that? Well, the best way to reach us is go to therateupdate.com. You're going to go over to the side here. There's multiple ways you can get us. Give us a call, 844-775-5626. Be careful. You make sure you call the right number and they answer the Frio team. Next thing is just schedule an appointment. If you're in the West Coast and we're in Chicago, you get home at 6, 7 o'clock. It's way past our hours here. Set up a meeting with us. We'd love to talk to you. We don't want to miss out on your business and helping you guys. If you're like, Dan, I just need to get this ball rolling because I have rental properties I want to get done and I want to get on it now, please just hit the apply now button. But we prefer if you have multiple properties or you're kicking the tires on investment properties, please give us a call or reach out to us on a meeting. We'd love to answer any and all questions that you have. So that's our debt servicing coverage ratio program. Hope you find it useful. If you don't, please share the video. You might have friends, family, relatives, neighbors, coworkers that have rental properties that just need help. So thanks again, guys, for watching. Please don't forget to give me a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. Talk to you soon. Bye-bye.